Is the USDA Rural Development Home Loan right for you? Maybe you've been researching them online and that's how you found this video, or you watch my channel every week and you're trying to decide, is this the loan program for me? Well, in today's video, I'm going to share with you the pros and cons of the USDA Rural Development Loan and help you decide whether or not this is the right program for you. So stay tuned. Hey, what's up everyone? This is Channing. In today's video, we're talking pros and cons of USDA home loans. The Rural Development Loan is a great loan program. I've got multiple videos on this channel, we'll link to them, that talk about the benefits of this loan program. But we're going to talk today specifically about the good and the bad, the pros and the cons of the USDA home loan, and hopefully this will help you decide if it's the right program you want to pursue when you're purchasing your next home. So number one, the biggest pro, right? The best part about these USDA home loans is there's no down payment. There's no down payment requirement when it comes to USDA home loans. They just don't have one. You don't have to put a down payment. It's 0% down on the USDA Rural Development Home Loan. And that's the biggest plus about this loan, because as we've said time and time again, the down payment is usually the biggest hurdle for most folks when it comes to purchasing a house. So the fact that USDA is no down payment for 97% of America, it makes it one of the best cons, and it makes it a great loan program that honestly more people should consider. And one of the reasons why I'm spending so much time talking about them, because I just don't think there's good information readily available to you, the consumer, on these loan programs. So the second great thing about USDA is that it has lower mortgage insurance, or PMI. They don't call it that, but that's basically what it is. Now, listen, anytime you get a mortgage, anytime, and you don't put at least 20% down, you're gonna have private mortgage insurance. And because of that, it's an extra added monthly expense on top of your loan that you're going to have to pay every month. But the pro about the USDA loan is not only does it have a 0% down requirement, it also has some of the cheapest mortgage insurance in any of the loan programs, because it's only 0.35% of your loan amount divided by 12 per year. So you're going to get lower monthly mortgage insurance premiums with USDA than you will with FHA, and unless you have really high credit and a larger down payment than you're going to get with conventional. So that's the second plus, the pro of this USDA loan, is that it's going to be cheaper monthly. Like, that's what it equates to, right? You're going to have not only no down payment, you're generally going to have a lower monthly payment, or at least the same monthly payment that you would have if you had put more money down. One of my next favorite things about the USDA loan, it's got competitive interest rates. You would think if you were buying a house and you weren't putting any money down that the banks would just rip your head off because of how risky it is, but they don't. And the reason for that is because the United States Department of Agriculture backs these loans. They insure them. Now, they don't grant this particular loan. We're talking about the guaranteed program. The direct program they do, and we'll do a whole separate video on that, but the guaranteed program, the USDA is actually insuring these loans, so if you don't make your payments, then they pay the lender back whenever they have to foreclose on the house, which we hope that doesn't happen to any of you watching this. But that's why you're able to still get competitive interest rates on this USDA loan, even though you're not putting any skin in the game, as they like to say. So by having this no down payment option, you're still getting a competitive interest rate. They're still going to be around what FHA is, and FHA rates are competitive to conventional rates. So they're still going to compete, right? Interest rate rise on all the other loan programs. You're still going to get a great interest rate. And finally, my next favorite thing about USDA loans is there are multiple ways to get your closing costs paid for with this loan. I've got a video I've already done where I talk about how to get your closing costs paid for, how to make this loan a truly no money out of pocket loan program. USDA makes this easier than anyone because you can roll in your closing costs of the loan if it over appraises. So if you buy for $250 and it appraises for $255, you can roll that 5 in. The seller can pay up to 6% of your closing costs, or you can get gift funds from a family member to help cover them. So there's so many ways to get the closing costs covered. You already aren't paying a down payment, and the PMI is cheaper, so it just tends to be a very inexpensive home loan. And then you add into the fact that you're buying in a more rural or suburban area, right? Because we're not buying farms, we're not trading in our polo for overalls, we're just buying in a more suburban area where the prices of homes tend to be a little cheaper than if you're competing in a major metro area. So those are my favorite things about the USDA loans and the reasons why I think you should consider them. But listen, the USDA loan is not without its cons, right? It's not without some downsides that you should consider before moving on or picking this loan or another loan program. So let's jump right into those. And the first one that we're going to talk about is the income limit. So USDA has an income limit. You cannot make more than a certain amount of money as a household. So not even you personally, anyone living in your house that works has to be counted into this income limit, which right now for most of the country is $103,500 a year if you have 4 or less people in your house, and $136,000 if you have 5 or more people in your house. You have to make less than that in order to qualify for this loan program. But honestly, now that the limits have continued to just increase, more and more people are going to qualify. When I first started in the business, we were in the $80,000 range and it was really tough. And now we just kind of keep going up each year, and it makes it easier for people to qualify, even if it is a con to the loan, because you don't have an income limit with FHA, you don't have an income limit with conventional. So they do have loan limits, which USDA does not have, but the income limit is a bit more restrictive than what you're going to get with other loan programs. The next drawback or detractor, if you will, for the USDA loan program is going to be that it's location restricted, right? So this is the big one. You cannot go and purchase a house in the smack dab in the middle of your major city. If you live in a town of less than 20,000 people or a suburb of less than 20,000 people, sometimes up to 35,000 people, you're going to be fine. But if you live in a major metro area and you want to live inside the city limits, the USDA loan is not going to be the loan program for you, because it does restrict where you can purchase, and most of it is going to be towns 20,000 or less, which could be suburbs, or like I said, up to 35,000 in some of the bigger, larger areas. So that's another detractor, right? You can't maybe buy exactly where you want, but what we see, like in our town, most people want to live in these suburbs anyways. So if you're already planning on living in the suburbs, it's definitely worth your time. One word of caution is if you live in a big city, you know, top 10, top 15 city, chances are even some of your suburbs have more people living in them than are going to qualify for this. So you may have to go even further out. But if you extend that commute just a little bit, you'll be able to get a better loan program that's going to cost you less money, and it may make that commute worth it. Only you can decide. So the next detractor on the USDA loan is going to be the PMI, that monthly mortgage insurance that we talked about just a second ago, about how it's so much lower than every other loan program, and it typically is, but it doesn't go away. So it stays on the loan no matter how much of that loan you pay down. The only way you're going to be able to get rid of that PMI on this loan is to sell your house and buy another one using a conventional loan, or refinance into a conventional loan. But honestly, it's the same with FHA. So if you're considering those two loans, it's going to be the same regardless. But it can be a detractor if you don't want to have to refinance or whatever. But honestly, guys, the statistics show that most people move every 5 to 7 years, and they certainly refinance when rates adjust. You know, as I'm shooting this video, we're in a period of higher rates. So, you know, it may not be as far-fetched as it would have been if you were able to get a 2.5 rate or a 2.75% rate, which isn't the case now. And then lastly, some may see this as a con. To me, it just makes sense. You can only own a primary residence with the USDA loan. You cannot go out and purchase an investment property. You cannot go out and purchase a commercial property. The only thing you can purchase with the USDA loan is the house you're going to actually live in, which makes sense. Like, you're not putting any money down. It's a special government program. It's designed to spur homeownership in more urban or more rural areas versus urban areas. They want people living in the home that they're financing. So you don't have to be a first-time home buyer to get the USDA loan, but you do have to buy a primary residence. And so that is, you know, for some, it may be a detractor, but if you're buying anything other than a primary residence, you're gonna need a conventional loan anyways. So you do the math on that, and, you know, is it a con? I don't know. To me, it's expected, but I put it on here because some people may think that it is. So is the USDA home loan right for you? Well, ultimately, only you can decide that. Hopefully this information, as well as some of these videos that we've linked throughout the process, will help you decide whether it's a program you should consider or whether you need to look at FHA or conventional. If you have any questions, drop a comment. I love engaging with everyone in the community. Please like the video so more people just like you can see it, and also subscribe to the channel so that you never, ever, ever miss a video. I'm Channing, and I'll talk to you next time.